So mostly my buys for the day will be bullish. So what I would like to see is a comeback here to sweep out the double bottom right there, and then a continuation higher. Let's see if we can get it. So that's nice. So we're seeing a push here. We have the fair value gap. So you see, I'm not doing anything magical here. If you're new to my channel, the way I'm able to predict with that much precision is just based on my data. And just to prove my point, let me show you why. I just journaled 120 trades and finished with a 40% win rate. However, after analyzing the data using what I learned working in private equity and my master's in AI, I found an 80% win rate setup within this sample. So let's test it on 6 months of price action to see how it performs long term. I'm a money engineer and I work one-on-one with other traders until they get funded and get their first payout, just like all of my previous students. Check the link in the description for more details. So now grab a drink and go over some price action. So in the last video where we left off, we were at 8% profit with a 60% win rate, which was very reasonable to be honest. And this is only by taking 10 trades. So I did not make this 8% by taking 30 or 40 trades. This is only by taking 10 trades, which is around 1 to 2 trades every week. So you can see that on January, we had 1, 2, 3, 4, 5, 6, 7, 8 trades. And currently for February, we only took 2 trades. So this is very, very nice. And now we'll be backtesting the last 3 weeks of February. And in the last video, I provided a lot of information about this specific strategy, such as certain steps and certain things I'm looking out. And in this video, I'll do the same and then provide more and more information about the strategy. But of course, if you want the complete strategy and also how to build one of your own, which is I think is even more important, then check out the link in the description. All right, so let's continue now. So this is one of the last trades that I took. All right, so let's go to the next trading day. So I need to clean all of the charts here. And as I explained previously, I built this strategy using Q4 and part of Q3. So of course, to test if it is a great strategy and if it is able to generalize well on a new data sample, just like we're doing in machine learning, I will need to do it on a testing set to be able to see how it's performing. So a testing set is a data set that the model never worked with. And this is what I'm currently doing. I was going to do it offline because this is what I always do when I'm done building a strategy. But I just thought, like, why not do it on YouTube and just share my process with everybody? Okay, so for this trading day, this is Tuesday. And we can see that yesterday's price action was bearish. The London session was also bearish. And the pre-market open was also bearish. So based on my journal, for those type of trading days, what I'm looking for is mostly a pullback because you can see that this is very extended. We have this huge candle here, which was most likely unused because this is exactly at 8:30, and we have many other fair value gaps on top that are not filled. So mostly my buys for the day would be bullish. So let's just get closer to the 9:30 so I can get the low of the pre-market. So this is a very weird low, but I'll still take it. So what I would like to see is a comeback here to sweep out the double bottom right there, and then a continuation higher. Let's see if we can get it. So nice rejection we left this week here. Let's see if we get something. Yeah, nice. So that's nice. So we're seeing a push here. We have the fair value gap. And as you saw in my previous videos, a lot of time when I tried to enter right at the open of the fair value gap, I got left off. So in this case, you can see that the difference between entering right away and entering at the fair value gap is around 10 points. But because the stop loss is already quite big, this 10 points doesn't make a huge difference. I'm just better off entering right away at the close of this candle and then just go to my 1 to 2. And what I like in this case is that my 1 to 2 is before this high, which is the high of the news candle. So I think there's quite a high chance that we go at least fill up half of this fair value gap. Let's see where it is. So this is my 50%. So I think this trade idea is quite fair, to be honest. Let's just go and enter right away. So we'll use a market order like that. So this would be my trade idea. Okay, so we did get the comeback to the fair value gap, so I could have used the fair value gap to enter, but I'm still happy with my entry. Okay, so we're seeing some profit, and there you go. You see, nice trade idea. So someone could have used the open of the fair value gap, and let's see how far this one goes. And looks like we're going to stop loss. Yeah, it eventually went to stop loss. So you see, I'm not doing anything magical here. If you're new to my channel, the way I'm able to predict with that much precision is just based on my data. And just to prove my point, let me show you why. So in my journal, I have many days that are looking exactly like this one. So what I will do is out of my 120 trades, I will filter out in my journal every day that looked exactly like this one, or at least that were very similar to this one. So let me just do that, and then we'll be able to compare the two charts, and I'll explain how I was able to predict this exact behavior in price action. Well, to be honest, the comeback to the 50 fib, I think is just based on experience because I'm not studying this part. I'm not studying how far we'll go into an opposite fair value gap. This is not part of my features. The features I'm studying are all of those, and I go in much detail in my course. So this was only based on my experience. But let me just bring up all the trading days that looked exactly like this one. So I just filtered out my trading journal and I was able to find 4 trading days that looked very similar to this one. Let's look at one of them. So I have this one that happened on November 25th, and it's this one. So if you would just take this chart and flip it, you would get something that's looking similar to this one. I hope you can see the similarities. So in today's example, I took a long when yesterday's price action was bearish, and I took a sell when yesterday's price action was bullish. So you can see that they're contrary, they're just flipped conditions. You can see that the pre-market condition right before taking the trade was very bullish in the journal example, and I took a short. In today's example, it was very bearish and I took a long. So once again, very contrary. So what I'm doing here is just I journaled in so much detail all of those trading days that I came across. And because price action is just repeating itself over and over from one week to another, from 1 month to another, I'm able to get used to that. And I know other traders are just suggesting you to backtest, right? To get used to price action. But what I'm telling you to do instead, and this is what I'm saying to all of my community, is not just backtest, because just backtesting and not journaling anything about what you're doing is just wasted time, to be honest. If you would just take this time and journal your trades instead in a lot of detail, this is the type of thing that you will be able to build. What I'm doing currently is I'm using my journal as a trading tool that I use every morning right before my trading session. You saw that I gave you my trading plan right before the market opened. I knew exactly what I was looking for. I knew exactly what I was going to execute on. And I just followed my plan at the end of the day. So I really hope you do create for yourself one of those tools, because this is a game changer. What I need to say, however, is that it is very time consuming. You see how much details I'm going into for each of those trades, but it is so worth it. Once you journal one trade, you don't need to go back and do it again and again. You just need to journal a new trading day, and this builds up from one day to another. Spending 5 hours backtesting and spending 5 hours journaling will not yield you the same results. Okay, so yesterday's price action, bearish, London price action, bullish, and we're kind of ranging right before the market opened. Let's see what happened closer to 9:30. Let's go on the 1 minute for that. Okay, so we saw a quick push at the end. Yeah, so this is quite ranging. I don't like this type of price action, but mostly what I will be looking for is a short. So you can see that this double top at that point. And as I said many times, a double top this clean will usually be swept. Let's see if I have something else. Yeah, so for this trading day, I would like to see a sweep of this double top, a continuation lower. So we can see that the low of the London session is not swept yet, and the low of the Asian range also. And what is building here? A lot of liquidity. And this is actually one of the setup we saw in one of my previous videos. And of course, I would also take the trade if we reach the yesterday's high. Let's see what we get. So bearish setup for the day. A nice reaction there. Let's see how we react from there. Okay. So what you can see here is that we got the fair value gap. We got some breakout structure. But what I don't like is that we're very close to my first target. So let's say we'll put the entry. The first target at London low could work. But because we're so close to the low of the pre-market open, I don't think I'll be taking this one. But let's just leave the TP and stop loss and see how we react. But this would be definitely a trade I would add to my journal. Let's see. Okay, so we got to come back to the fair value gap. I could have used the open of the fair value gap, but you see there's not a big difference. I'm just better off entering right away. Yeah, you see what happened? So that was a good decision to not take it. We just swept those lows. You can see that we had those 3 lows right there. We swept it. We had a nice push, leaving multiple fair value gaps, and then went higher. But it's not the type of setup that I'm interested in. I told you my trading plan, I was looking for a sweep of the high that we got. We got a nice reaction, but the entry was not great, so I didn't want to take this one. We still have a chance to go to yesterday's high, like I explained. So we'll see how this one goes. But price doesn't look like it's going there. So overall, my bias was right. We had an overall bearish day. You can see that we opened there and we closed here for the New York AM session. So this doesn't include the New York PM session. Let's go to the next trading day. And if you like this type of content, please leave a like and please subscribe. I think I only have 20% of my viewers are actually subscribers. So a lot of people come to my channel, they just watch my videos and then they just leave. So if you could just help my channel out and subscribe also, it would mean a lot. And this would also allow me to give more resources to this YouTube thing that I'm doing. Okay, so those are my levels. I'm seeing here this double bottom, so that could be interesting. But overall, yesterday's price action was bullish. The Asian range, kind of bullish. The London session turned bearish. Let's get closer to 930. Okay, so overall for the day, my bias would be bullish. I'm saying this so that we could sweep and then go higher. And as I explained, I saw the nice double bottom, very clean double bottom. So we could go back down, sweep this double bottom, and then go higher. What I don't like about this trade idea of sweeping just this low and then going higher is that we have the low of the Asian range. So if I would take a trade here, put my stop loss somewhere here, there's still a chance for price to go and sweep the low of the Asian range. So we'll see what price action gives us, but I might decide to not take the trade because of the Asian range. And this is the type of thing that you need to consider when taking a trade. So we did not get the sweep yet. So we got the sweep right there. Let's see. No fair value gap for now. Okay, so we did get the sweep of the Asian range. But as I said, and you saw in my previous videos, I don't like taking trades out of the Asian range, at least during the New York AM session. I know a lot of people are using it during the London session, and based on my experience, it looks like it's working well. But personally, during the New York AM session, I saw a very low win rate, which I actually presented in my journal in the very first video of this series. So if you want more data analysis and details, you can just watch the first video of the series. We're very bearish for the day, so I don't think I'll be taking a reversal at that point. So one thing I can give you here, one hint to see how strong the bearish trend is or how strong a bullish trend is by looking at how we're reacting from the fair value gap. So I'm seeing here a fair value gap that was formed to the downside that we filled up, ranged some time, and then continued lower. We then formed those two fair value gaps in here also, this one and this one. And you can see that we filled this one and we rejected it right away and continued forming fair value gaps down. So in those type of conditions, I don't like taking reversals. We got one, so this could have been a potential entry, but because of what I just explained, I don't like taking trades in such a bearish conditions. I'm not going to take it. Yeah, we eventually went back down. So we were in some profit, so this would be the entry, something like that. So price reached a 1.5. But we eventually turned back down. And we're getting close to lunchtime, so I don't think we'll have another trade here. Yeah, next trading day. Okay, so yesterday's price action, quite ranging, but overall bullish. London session bullish, but right after we saw a sweep of the high of the London session, and then we're continuing back down. So let's get closer to the 930, but overall, I think I'll be looking for bullish bias for the day. So maybe sweeping this low, and then a continuation higher. I don't like taking trades out of the New York PM session, but seeing a trade near the yesterday's low could be interesting. Let's see. So let me just put the low of the pre-market and then let's see what happens. All right, so nice sweep of the low of the pre-market, which is great. Once again, just like I explained for yesterday's price action, you saw that we filled up this fair value gap very clean, and then continued lower. And because of that, even if we see some kind of reaction here, I'm seeing a lot of bearish momentum, so I won't be taking a trade there. Yeah, right away we went lower. Let's see if we can get here a reaction. But because this includes the New York PM, this is kind of a trap for me. And anyway, we're seeing the same kind of reaction. Rejection and then going lower. If I remember well, I think there's a guy called Falcon something, and he has kind of a bullet strategy using that. You see how we're going back down and then coming back up, continuing back down. But I don't remember the details about this strategy, but I feel like this is something that's close to what they're trading. Yeah, let's see the reaction there. But yeah, this is not something that interested me. Let's go to the next trading day. Okay, so let's look at price action. We had a very bearish day for yesterday. And another comment, even though this is Monday, I consider the Friday yesterday's price action. So I know the day before Monday is Sunday, but I'm talking about trading day. So this is yesterday's price action. And Asian session ranging. London also ranging, and then same thing here. I'm wondering if this is a bank holiday because I'm not seeing a lot of volatility here. Let's just check Forex Factory for that day. So this day was Monday 19th. Yeah, so I was right. What bank holiday is that? President's Day, yeah. So I could have guessed it seeing the charts. So most likely there won't be a trade on that day, but let's just check price action. But if this was a normal trading day, even though the conditions are not great, I think I'll be mostly looking for a short. But like I said, the Asian range is not great to take a trade from. Same thing for New York PM. So I would need to see something near the yesterday's high. But because this is a bank holiday, I'm not expecting much for that day. And you're just better off not trading it, to be honest. Yeah, so we got some kind of reaction there. We had this fair value gap. But what do we have near this reaction? The high of the Asian range. So if a trader was trading during this bank holiday, maybe he could use the open, put the stop loss here. But what do we have here? The Asian range. So there's a high probability and there's a good chance that price could eventually went there. It's not always given. Sometimes we just go from there, but this is what can happen. And this is what we got. So nothing to do here. But you saw instead, we've sweep the Asian range. We saw a nice breakout structure. We have those fair value gaps, a comeback to it, and a continuation down. But this is not the type of setup that I'm taking. But this could have fit another trader's plan. So nice reaction that we got here. Nice formation here. This kind of M, this is a nice formation. Next trading day. Okay, so yesterday quite bearish. Same thing for the London session. Let's look at the pre-market open. Very ranging. So we're creating liquidity both up and down. Let's look closer to the 9:30 open. Yeah, so in those conditions, I would prefer seeing a short for that day. So I'm looking to take a short. But one thing that might stop me from taking the short is the presence of the Asian range high and the London session high, which are not swept yet. So those are good liquidity points that we could eventually go and reach. So I'm not looking to take a trade from either of those levels. And even this one, I think I would prefer not taking a trade there. But if we eventually reach the yesterday's high, then we could see maybe price action flip at that point. Let's see. Yeah, right away. Where did we go? We went straight to take out the London session. But as I said, I don't like taking trades out of there because still there's the Asian range that we could eventually go and reach. But we're seeing a nice BPR here with this fair value gap. Let's see the reaction there. Unfortunately, it was a good setup to take. But this is the type of setup that I would just add to my journal. And if I'm seeing it once again, I might just take it at that point. But we see the comeback to the fair value gap, or even taking an entry after we got this candle close, we could get a nice 1 to 2. So nice reaction. But based on my data from Q3 and Q4, those type of setup are not working great. But once I add all of 2024 and then I'll continue adding 2023, my decisions and my trading plan might change. And even as I'm adding new trades from 2025, because I'm still updating my journal from one day to another. Every time I see a new trade in my day-to-day trading, I'm adding it to my trading journal. And this is how I'm able to update my strategy and stay on top of the market conditions, because everything is changing from one year to another. Current trading conditions are not the same as 10 or 20 years ago. And this is how I'm able to stay up to date with the market. Because someone might give you a trade that's working currently, but might not be working 5 years from now. So if you decide to drop everything, your career and everything, to go into trading because you found one strategy, how can you guarantee that you can sustain yourself as a trader with that? Personally, my answer to this problem, and what assures me that I'm able to sustain myself as a trader and continue making a living out of that, is by using my journal and updating my trading strategy. So I'm seeing a nice reaction here at the fair value gap, but I'm not looking for a bullish day for that day. And then this is lunchtime. So perfect respect of my bias for the day. I was looking for a bearish day based on the type of trading day that we got. But I was kind of reluctant to take a trade out of the London session, especially because we had the high of the Asian range that are not swept. And if you've been watching this far, I guess just to thank you, I'll show you an example of this kind of trading day. So what we're looking for is a trade where I'm taking a trade out of the London session, but the high of the Asian range was not swept yet. Let's see if I'm able to find something that's similar to this setup. All right, so I just filtered out my 120 trades and I was able to find 3 setups that look very similar to this trading day. And you can see that all of them were losses. So this is one of the reasons why I didn't want to take this trade. Let's look at one of them. So this happened on November 12th. All right, so you can see that yesterday's price action was bearish, just like today. I actually took 2 trades during that day. The first one, let's go on the 1 minute to see it closer. This is the 2 minute, let's go on the 1 minute. So you see that the first one happened when we swept first the high of the pre-market open, just like we got in our example. But during that day, we also swept the London high, which is this line right there. Let's go on the 15 minutes so I can show you. You see that the first line is the high of the London session, right? But you can see that what's interesting in this case is that the Asian range, which is this line, was not swept yet at the time of trading, which is very similar to what we got today. The high of the London session was swept, but not the high of the Asian range. This is very similar in this case. And what happened? Price continued to also sweep the Asian range and then finally went into profit. So this is why I was reluctant today to take the trade, because in a similar situation in one of my older trades, we eventually went higher to take out the Asian range. And this is why I did not take this trade. But in today's example, it worked very well. So what I will be doing is just adding this new trade to my journal. That way the win rate and the return will be adjusted to that. And if I'm seeing that this happens over and over again, then I might decide to just take trades out of the London session, even though the Asian range is not swept yet. So you see, this is how I'm making those decisions. I did not just decide to not take this trade today. This was based on my data. And in this case, you can see that those 3 similar conditions were all losses. All right, so let's just go to the next trading day. So I hope I'm providing value. I don't see many traders talking about this kind of journaling. I see everybody talking about the importance of journaling, what you should be doing, journaling your thoughts and everything. But I don't see many traders talking about journaling mechanically your trades and being able to use your journal as a tool in your day-to-day trading. I guess I'm just bringing my background in AI and machine learning. For the people who don't know, I'm actually a software engineer. And right after doing my bachelor in software engineering, I did a master's in AI. We have the institute called MILA here in Montreal. It's Montreal Institute of Learning Algorithms. It was built by Yoshua Bengio. And for the people who don't know him, he actually won the Turing Award, which is a Nobel Prize in computer science, because of his work in deep learning. And he actually opened an institute here in Montreal, and I decided to do my master's here. So I guess this is just my background in AI that I'm bringing up to my trading. And in terms of trading, I've been trading for almost 10 years now. I started very young while I was still studying during my software engineering degree and my master's degree. So that's why I have all of those years of experience. Okay, so the previous day, bearish. I'm seeing here this clean double top. We might see a sweep of those levels. Bearish London session, Asian range also bearish, and the current session quite bearish also. So I'm prioritizing here a bullish day. I would like to see maybe a sweep of this low and then a continuation higher. But what I don't want to see is a sweep of this low at the same time before moving higher. So I would like to see this low being swept and then continuing higher. I don't want to see price go to that low. Why? Because I don't like the New York PM session. So my best case scenario would be a sweep of this low and then a continuation higher. Let's see if we can get that. Perfect. This is what I like to see. So we got the sweep before going to the New York PM session, and this is what I was looking for. And then we can just put the entry right there. Because we're very close to the 930 open and I'm seeing some kind of rejection here, I'm expecting a comeback to the fair value gap. Price might leave without me, but I'm able to take this risk because I saw this setup happen multiple times. So let's just go with that and go with a limit order. There are different fair value gaps formation. There are some that are very, very bullish, but you can see that this one came back close to the open of the fair value gap and we left also this wick on top. So I'm expecting some kind of pullback before moving higher. Let's see if we can get that. Yeah. But this one went for a stop loss, which is all right. The trade idea was good. I just executed my plan. So I'm very happy with the execution, and anywhere we're currently at 9% profit. So that's okay. I don't really mind. Let's see if we can get a reaction from yesterday's low. So we did get the reaction. This could be a potential entry, but because this is yesterday's PM session, I don't like to take trades from it. Based on my trading sample, based on my data, this is not a high priority trade, but still, as always, this would be the type of trade I would add to my journal. Let's just see how it performs, but I'm not taking this one. All right, so first trading one, we saw a nice comeback to the fair value gap and then straight to take profit. So this brings me to another great subject. How many trades should you take every day? Personally, my rule of thumb is that I'll be taking one trade. If it goes to take profit, I will be done for the day. But if the first trade is a loss, I will allow myself another trade for that day. So this is how I'm trading, but you can adapt to your own risk management ways, to your own risk appetite, and your own way of trading. But this is what I'm currently doing. So very interesting setup here. We swept the yesterday's New York PM, which was also at the same time yesterday's low. So maybe this is why it was more significant. But we did not go very far. We only went to a 2.3, and then we finally switched back and went to stop loss. But nice price action there. So I don't know what happened during that day, but we left this big gap and we had a huge bullish day. Let's just clean the charts. All right, so what do we have here? So yesterday's price action, very bullish. We have this huge gap that kind of worries me. We can go back down and then fill it up. And both the Asian range and the London session were quite bullish. So for that day, I'll be looking to also go bullish. But as always, as we explained before, I will be reluctant to take a trade from the London session without having the Asian range also swept. So let's just see what happens. But my best case scenario would be to see a sweep of yesterday's low and then a continuation higher. But it is so far from there that I don't think that I'll be seeing this trade. Okay, so we just swept the pre-market open. Came back to the low of the pre-market open and then finally went higher. So a potential trade would have been to use this fair value gap to take it higher, but there are two reasons why I did not want to take this trade. First of all, we already swept my first target, which is not a great thing. If you want to take a trade, your targets should be untouched, in my opinion, at least. And the second reason why I didn't want to take this trade is just like I explained. We have the low of the London session and the low of the Asian range. They are not swept yet. So there was some reason that price could eventually go back down and then go higher. But looks like current market conditions are very bullish. And we're just continuing yesterday's price action. Let's see how we close near lunchtime. Yeah, this is the end of the month of February. I don't know why price action was so bullish. Let's go to the next trading day. So we're almost at all-time highs here. I'll just clean those levels. Let's get closer to the 930 because preferably I would like to see this level swept before 930. Yes, so we got it. So I like that. So we don't need to worry about it. It's already swept. Okay, so let's just look at the different trading sessions. So we're currently very, very bullish. This is on Friday. Yesterday's price action was bullish on Thursday, but the London session was bearish also. So usually what we see on Thursday and Fridays, and this is usually based on the weekly market development. In a lot of instruments, we see some kind of pullback from Thursday and Friday. So for that day, I'll be expecting a sweep. My best case scenario would be a sweep of those highs and then a continuation lower. Because we've been so bullish during the entire week, this would be my main idea for today. So a sweep of this high and then a continuation lower, which we just got right there. Let's wait for a fair value gap to the downside. Nothing yet. Yeah, so a small fair value gap right there. So I'll just enter right away. So this is Friday, the end of the week. We've been very, very bullish. Everything was bullish. So I'm looking for a quick 1 to 2 for a pullback eventually. So this would be the trade idea. Perfect example where taking a limit order doesn't really give us much here because it will be at the same place, right? So I'm just better off entering right away. Let's see. And nice 1 to 2. But because, as I explained, price has been very, very bullish, I'm expecting price to go very far. But because my trading plan is to always go for a 1 to 2, I just took my 1 to 2. But I'm seeing this low being swept. We have a lot of reason to also go to the London low. So there's another potential target here. And we have all of those lows that are not swept yet. Let's see how far we go. But currently price is running at a 1 to 4. So very, very nice. Let's see if we can get the low of the pre-market. So we got it. We also got the low of the London session. And then we got to the end of the session. So beautiful price action. Perfect execution of my trading plan. Kind of salty that I didn't get this 1 to 12. But we never know what can happen, you know. I'm still going against the trend, so there's a high chance that we can eventually go higher. So I just took my 1 to 2 and I should be happy with that. But this went to a 1 to 12. So that's a nice trade that I'll be adding to my journal also. My 1 to 2 here. Currently running at 11% profit, so that's very nice. Let's go to the next week. So this is on Monday. Let's get closer to the 9:30. All right. So yesterday's price action on Friday was overall bearish. You can see that eventually during the PM session we went even farther from our trade. We took a trade right there at the top of the day. And London session was bullish and the pre-market also was bullish. So mostly what I would be looking for that trading session is a sweep of this high, preferably without the New York PM, just like I explained before. I don't want that and that. I just want a sweep of this high and then a continuation lower. Why? Because we have this low, we have the low of the London session and the low of the Asian range also. So some good reasons for price to continue lower. And if we eventually went that much higher, I might expect price to slow down a little bit and then get some kind of reversal after sweeping the yesterday's high. So those are my different trading plans for that day. Let's see what we get. So we got the sweep of the high. Can we get an entry? Yeah, so we have this small fair value gap right there. So I can just take my entry from there and then go for a 1 to 2. We're going to take a market order because there's no point using the open of the fair value gap here. So very nice reaction. We went to a 1.7, which swept this low. So I hope price can continue and go a little bit lower. Okay, this is bad news. Unfortunately, price went slightly higher and then swept me there. So price went to a 1 to 1.7, swept this low and then eventually reversed back. And we did not go to sweep the London low and the Asian range low. So that's unfortunate, but I just followed my plan. So we're still seeing kind of a reaction here, but I won't be taking that. But we saw a nice reaction there, but it's near lunchtime, so I'm not going to take that. And anyway, if I'm not wrong, this is the New York PM session, which I don't like to trade from. Yeah, but nice reaction there. You see how price is reacting from my levels? They're very precise. We did not close above my level. We just swept the level, reached it, and then went lower. Let's go to the next trading session. And if you've been watching so far, I really appreciate it. And I hope you're getting some value out of those backtesting. Let's get close to the 9:30. Okay, so let's look at yesterday's price action and the different trading sessions. So London was very bullish. Yesterday's price action was kind of bullish, but at the end we came back down. So in those cases, what I like to do is go on the daily and look at the daily candle. Yeah, you see that the open and the close were very, very close, but the candle is green. So technically this was a bullish day, technically. So in this case, I would be looking for a short for that day. We have once again the infamous New York PM, which to be honest, it worked pretty well during today's backtesting session. Like as I get more data and more data in my journal, I might start taking trades from the New York PM. So my best case scenario would be a sweep of this high and then a continuation lower without going to the New York PM once again. All right, so we did not get the pullback to my level, but we're currently following my bias. So I guess this would be a no trading day. We stopped exactly at this level right there. Let's see what we get. And if you could show me someone else that's able to pinpoint those levels just like that, please put them in the comments. But I really hope you put those levels in your charts. You can see the reaction from those levels. Yeah, no trading day for that day. So what would have been perfect was just this candle just going slightly higher and then going back down. But we did not get it. Bias overall great, but no execution for that day. So what was the level? This was the London session. So you see that if you didn't know about those levels, you maybe would have thought that price would eventually go to those lows, right? But no, we stopped exactly at this candle right there. If someone didn't have those levels, let's say we remove them, someone would say that an important level would have been this one or this one, right? But you can see that price did not stop at either this one or this one. It stopped exactly at the low of the London session. And this is the precision I'm working with. Let's go to the next trading day. I think we're getting close to the end of February. This is Wednesday. Okay, yesterday looks bearish, I think. No, yesterday was actually bullish. So yesterday's price action bullish overall, but very messy price action right there. London very, very bearish, and the pre-market open looks bearish also. We have the high of the Asian range that's not swept, this is important, and the high of the London session also, and the low right there. So under those conditions, what I would like to see is a bullish day. So in the best case scenario, what I would like to see is a sweep of this low, and then a continuation higher. Yeah, that would be my trading plan for the day, because we have those two targets that could be a reason why price could go higher. So this is what I'm looking for today. And once again, preferably, I would like to see a quick reaction right there, then a continuation higher. I don't want to have price go lower there before moving back up. Let's see what price action gives us. And you can see that once again, I gave my entire trading plan before the 9:30 open. And this is what you should be doing also in your case. Okay, so we got the sweep. Nice reaction. We left the fair value gap, almost broke out this high. So let's just enter right away. So in this case, you can see that there's a lot of momentum, a lot of bullish momentum. So I'm not expecting a comeback to the fair value gap. So I'll just take the entry right away. And then let's just see for the take profit where we can have it. This might look like a big stop loss, which kind of is. However, we saw in my previous video that we cannot just base ourselves on the visual stop loss itself. It's a 38 points, and we can see some days moving 100, 150 points. So this is very fair for a stop loss. Of course, I would have preferred having a smaller stop loss, but I'm just following my plan here. Let's just see how it performs. So market order right away, and let's see. And no, it went lower. It went lower to the low of the London session. So you saw that it would have been better for me to not take this trade because of the low. It looks like when I decide to take a trade, even though the low of the London session is not swept, I get a loss. But when I decide to not take it and just observe, it goes to the take profit. But that's okay. All right, let's see the reaction there. What day is this? 28. And then at that point, we got a nice reaction. So you know what? Let's just take it at that point. Because we took this one even though this was not swept. And now that we swept the level, maybe we can take it from here. To be honest, this is kind of outside my trading plan. So I just take it because until today, based on all of my previous videos, we saw some nice reaction out of the London session. And you just saw in this video actually another trade that worked pretty well out of the London session. So let's just take it to see how it performs. Alright, so I'm currently editing this video, and in here I made a mistake because I wanted to enter at the market order and not use the open of the fair value gap. So I had to cancel this trade. And the issue with canceling this trade is that this will affect the results at the end. And there will be one trade that is neither a stop loss or a take profit. You'll understand after, but it was because of this situation here. I'll go with a market order because there's not a huge difference for the open of the fair value gap. And then just go like that. And of course, this one went to take profit and went higher actually until the first target, which is the high of the pre-market, to a 123.8. So the reason why I'm also backtesting my strategies is for those type of things. What I'm seeing currently is that at the beginning of 2024, based on my other videos in this series and also today's price action, we're seeing some good reaction from the London session. So I might reconsider taking trades from the London session. We had another example that I missed out on because of the London session. But remember that in the other example that worked out, the high of the Asian range was not swept yet. So those are the type of things that I need to study and do my analysis on before deciding to go with this type of trades. But price eventually went for a 4 point, almost a 1 to 5. So nice reaction there. Let's go to the next trading day. So this is the 29th of February. So in 2024, it was a leap year. In French, we call those bissextiles. And so we have the 29th of February. Let's clean all of those levels. I don't know what happened during that day, but we saw a lot of movement. When I told you that some days we can move 150 points, you can see that currently we moved 180 points. So in those conditions, going with a 30 points stop loss, even though it looks huge in current conditions, but you might be surprised by how much price can move. So yesterday's price action was bearish, London session bearish, but the Asian range was bullish. So this is also important. So mostly for that day, I'll be looking for a short. What I would like to see is preferably this high being swept. Let's just go on the lower time frames. I would like to see the high of the pre-market open swept and then a continuation lower. Let's see if we can get that. So we got the sweep. Okay, but what are those levels here? Let's go on the 1 hour to see. Okay, so those are very old levels. Those are from 3 days ago. And as I explained in one of my other videos, I don't like taking trades out of those old levels. Those are too obvious. A lot of people will be taking trades from them. And most of the time, what I found out, at least in my journal, is that they go to stop loss. So I won't be taking a trade here. However, those old levels are very nice targets. So I don't use them to take a trade from, but they could be used as a target. Let's see. But we got a nice reaction from them. Yeah. So my bias was correct. I had a bearish bias, but because of those old levels, I did not want to take a trade there. But a potential entry could have been maybe this fair value gap or even this one. But this is not the type of thing that I'm trading personally. And then this is the end of the February month. So let's just see how we performed. All right, so we took 17 trades in total from January to February, and we got a 56 win rate with an 11% return. So this is on average around 5.5% per month, which is very, very nice, to be honest. I don't think someone could complain about that. If you have a 100K or 200K funded account, or you have multiple funded account, this could mean 10 to 20K in return in only 2 months. So February was pretty great. We had a 7% return for February. And once again, I'm taking 1 to 2 trades per week. Except the last one, we took actually 3 trades. I don't think that's true. I think in this case, I've put an entry on February 28th. I think it's just because I canceled an entry. At the end, we have 3 trades here, but I think one of the 3 trades was a canceled trade. I only took 2 trades on the 28th. And you can go back in the video to see that. Where can I access all of my trades? Okay, yeah, this is what I thought. So on the 28th, I took a trade, but I canceled it right away because I wanted to use a market order. So this is on the 28th, I only took 2 trades. The 1 loss and then the 1 win. So this was not counted. So I actually took... So I think I actually took 16 trades. So this might affect the win rate. I'm wondering how it's calculated. But pretty nice overall. And we'll be continuing on the next video for the months of March. And if you want more details about the strategy, you can definitely join us in the community. And I also gave a lot of information about it in my last videos. So make sure to watch it from the beginning of this series. All right, see you in the next one.